Morning, all of you.
Good morning.
Very good morning, ma'am.
Morning. Okay. Please mute your mic. Please mute your mic. That's it. That's it. Okay. In previous class, good morning, all of you. In previous class, we discussed about companies, forms of business organizations. Under the forms of business organizations, we discussed about the sole trader form of business, where single owner is the owner of the business, single individual, and he himself manage the business. Small business entities like kirana stores, boutiques, salons are examples for this, and no registration required. And this form of business entities generally not required any legal formalities. They are very flexible. Coming to the next, we discuss about joint Hindu family system. Joint Hindu family system is the one where business entities are from ancestors. Family business is carried on by family members, ancestral days. Generally, Karta is going to be the head of the family, is said to be the Karta, and Karta is going to be the owner of the business. He takes the responsibility. Other family members, male family members of the business, are going to be members, and their liability is limited, and the family members, Karta's liabilities are limited. Okay. Next, in this, there is generally continuity will be there. And as is a family business, drawbacks are like members may, due to disputes, may come separate and have their own business. As compared to the joint stock company, this business has a very less scope for continuity. The next, we discussed about partnership form of business. Under the partnership form of business, where two or more individuals join together and do the business, and these individuals bring their capitals, and do their business. Okay, and whatever the profits comes, they share among themselves. Generally, registration of partnership form is not compulsory as per the law, but it is required for the benefit of the business itself. because an unregistered firm faces certain drawbacks. So to overcome those drawbacks, registration is desirable for partnership firms. Under the partnership firm, there exists some agreement. That agreement can be oral or written. If it is a written agreement, we call it as a partnership deed. Okay. So we also discuss about different types of partners like active partner, sleeping partner, partner by holding out, partner by estoppel, nominal partner, minor partner, right? So now these three forms of business entities we discussed in our previous class. Let us discuss about our next form of business entity, that is cooperative societies. Cooperative societies, again, this term cooperation is derived from the Latin word cooperate, where the word co means with or operate means to work, means to work together, working together. Okay, this means cooperation means working together. Generally, this cooperative societies have been defined by Cooperative Societies Act 1912 as a society which has its objectives for the promotion of economic interest of its members in accordance with cooperative principles is said to be a cooperative society. Okay, a group of members were joined together with an objective of promoting economic interest of its members and in accordance with the cooperative principles, that society, any of such society is said to be a cooperative society. Okay, so the basic objective of these cooperative societies is not making profit, but to serve the society and bring economic benefit like social, economic, educational benefits to the society. Means they render service for the development of the mutual help and as well as for the development of the society. So let us see the features of cooperative societies. Okay, before that, objectives serve in place of profit, mutual help. So they serve, sorry, they serve the society in means they do their business activities or society activities with an object of service rather than a profit, and providing mutual help to the members among themselves. Yeah. Okay, mm, one second. Okay. In place of competition, self-help is in place of dependence, and moral solidarity in place of unethical business practices. This is the main objective of cooperative societies. Means they want to serve the among themselves by providing mutual help instead of having a competition in the society, and provide self-help like they themselves provide instead of being dependent on someone to come and provide them the required requirements, fulfill their requirements, and moral solidarity in place of unethical business practices. These are the objectives of cooperative societies. Features: voluntary association. That means a cooperative society is joined by the members who join voluntarily, means who join voluntarily on their own. Means if you are a purpose and if your objective is to render the society, then you join as a society member on your voluntarily means on your own. Okay, they are free to join in the society at any time. Association of persons, yes, individual who join voluntarily in this society will form as a association, group of association, and bring their possible amount of capitals into the business. The next one is unrestricted membership. Anyone can join in this business or society at any time, and they're also free to leave the society whenever they want. So there are members. There are there is no restriction to become a member of this corporate society. No restrictions, no rules and regulations are there in this society. Okay. Next one is equal voting rights. Yes, irrespective of the capital contributed by the members in the society, every member of the society has equal voting rights. Okay, one vote, one share. That is a one vote, one share is in the joint stock companies. In joint stock companies, members have the voting rights depending on the number of shares held by them. But in cooperative societies, it's not like that. One person, one vote. That's how they have a equal voting rights. The next feature of cooperative societies is democratic management. Generally, in this society, as members are free and join voluntarily and no capital restrictions, so this society management also based on the democratic principles. That each person is the principle of the society. The main motto of the society is each for all and all for each. As everyone for all and all for everyone. That is their basic principle, and based on the elected members, of the society will be elected as the management. Coming to the main objective or motto of these societies is service. As we discussed in the meaning only, the very objective or motto of cooperative societies is providing service, self-help, and serving the society. The next one is coming to the distribution of profit. Actually, as these societies are not profit motive organizations, we don't call the what you call the amount that they realized out of their operations as profit. In cooperative societies, we call the amount realized out of the operations of the business as a surplus. That means that this surplus, when revenue is more than the expenditure, we call it is surplus in case of joint cooperative societies. Generally, in case of joint stock companies, if revenue is more than the expenditure, we call it as a profit. But as these societies are working for service, not for profit making, so we don't call that as a profit, we call it as a surplus. Okay, and actually whatever they do, the business, all their business transactions are in the form of cash only, no credit transactions. And whatever the charges that they collect upon their services, they are very nominal. They don't charge high, and those nominal charges also they collect in order to meet their expenses of the society, but not for making a profit. That's the reason why the revenue over expenditure in cooperative societies we call as a surplus. Understood? Okay. So how do they distribute this surplus? Generally, there is some percentage, like 25%, 10% of the surplus amount they transfer to the reserve fund for the welfare of the society, and 25% of surplus they use for the societies of development, and the remaining whatever is there, that will be distributed to the members on the basis of purchases made by the members from the society. Because even though the very purpose of the society is rendering service and self-help, so whatever the purchases or the they are doing, if their whatever the sales or the goods they are dealing and selling in the society, if their members itself not purchase, who will purchase from the outside, right? So in order to encourage the more and more members of the society to buy from the society, whatever surplus they made, the leftover surplus after transferring to the welfare fund and society reserve fund, the remaining balance of surplus, this society will distribute to the members based on their purchases made from the society. Okay. Anyway, the next point I just now explained, cash trading. These societies do their business only on the basis of cash. No credit transactions are allowed. The next one is corporate status and state control. Yes, cooperative societies are required to be registered under the Cooperative Societies Act 1912. Okay, and on registration of this society, it becomes a body corporate and enjoys separate legal entity. Means unlike a joint stock company and this cooperative societies also to be get registered. So because of this registration, they get separate legal existence and identified in the eyes of the law, and they will be registered under Cooperative Societies Act. Coming to the liability of the society members, it's a limited. The liability of members of the cooperative societies is generally limited. Why? Because the members are voluntarily joining, and no restriction on capital contribution, no restriction on membership. Same way, this is okay. But when liability is limited, then only it attracts more number of members, right? So, and it can able to run with the sufficient funds. So that is why here in cooperative societies, the liability of members is limited. Next, coming to the merits of cooperative societies. The first one is easy formation, because the formation of cooperative society is very easy because members join, no restriction on joining of members, and no restriction of capital contribution by the members, and registration, whatever is there, that's very nominal registration, requires very few legal formalities. That's why formation of cooperative societies is easy as compared to joint stock companies. Next one is perpetual succession. Yes, as it gets registered, and number of no restriction on members, maximum number of members, minimum 10 to be there to start the cooperative society, and then maximum unlimited. So when there is an unlimited, there is no limitation over the maximum number of members, automatically it will not get effect with the death or leaving of any one in member or few members. Okay, that's how these cooperative societies also have a perpetual succession. That means continuity of existence as like joint stock companies. The next one is democratic management. Just now under the features we have discussed, the members are elected members and one man, one vote. It's not based on the capital held by them, but based on the one man, one vote. So that's how there is a possibility of having a good management. Those are elected by the members collectively. Good management means good, efficient running of business, right? Next one is mobilization of savings. Just now we said these business cooperative societies, whatever the surplus made by them, they're not going to distribute entire surplus to the members. They transfer certain percentage to the welfare fund, and to the welfare of the members. Then only the balance will be distributed to the members. That's how it encourages the small savings for the constructive purposes. Means whatever the funds, the surplus they are transferring to the funds, those funds they utilize for various purposes for which on which a society has been formed, like providing education facilities. So they utilize that funds in constructing schools and conducting classes for the weaker section, or the members of the society children, or they utilize those funds in constructing hospitals and providing healthcare facilities for their members and the people living in the society. Like that, whatever the surplus they made out of their business operations, that surplus, a part of that surplus they use, as they are using or transferring to the reserve fund or surplus fund. That funds helps the societies in uh, rendering the services and working for the objective of the society. That's how it is advantage. Economy of operations is expenses of working cooperative societies very minimum, because they are first service oriented, they get certain benefits. At the same time, they buy in the large quantities sufficient to their members and the society easily. So that's how they enjoy the economies of operations, and they will able to sell at a minimal prices. Next, saves members from exploitation. Yes. In the meaning itself only we discussed, cooperative societies are mainly for self-help. Okay, that is among the members itself only. It provides service to the society, as well as the main motto is providing self-help to the members. Like whoever the members are there, these societies provide loans to these members at a very reasonable rate of interest. Instead of going at the same time, they sell goods at a very fair prices to their members. That's how they save the members from the exploitation. Means, see, their members, whoever the members of the cooperative society, those, if you need any financial assistance, instead of going to outside banks and financial institutions and pay higher rate of interest and all, what this society do, provide such financial assistance to their members. And that financial assistance they provide at a very low interest rates as compared to the outsider banks or financial institutions. That's how they save their members. Similarly, various goods and services, whatever their education, if they are providing education through schools, hospital, healthcare facilities through hospitals, or consumable goods through consumer stores, whatever they provide the services or goods, they provide at a very fair prices. I told already, they charge, but at a minimal price to meet their operational expenses only. So that's how their members will be saved. The next, state assistance. Yes, cooperative societies being formed with an object of rendering services, these get some assistance from the state in the form of exemption from paying of tax or stamp duties or registration fees, etc. Means exemption from tax in the sense not entirely, but the tax that they pay on certain activities or certain funds is very less as compared to the normal profit-oriented business entities. Social importance, as cooperative societies are very objective is rendering service without any profit, so that automatically helps for the society in developing uh, through their activities. These are the some of merits of cooperative societies. Let's see the demerits: inadequate capital. So though the unlimited number of members, but the capital restriction is not there. So raising of capital sufficiently is very difficult. Next one is inefficient management. No financial stability, and to appoint the special means experienced professional managers among the members who are there, from them only they select. So there may be it may limit the ability of efficient managerial abilities. Lack of business secrecy, as these are the service motive organizations, and all the members there, so they are supposed to disclose their business operations periodically in, to the members. So that's lack the secrecy, lack of motivation. Yes, and these cooperative societies, as I said, all their prices are very nominal. As so, whoever work in the very nominal, they are working for service. So the whoever working in these societies will be paid very low as compared to the outside markets. So that's how this remuneration, as remuneration is low, the people who work in this may be less motivated. Okay. Next one is state control. Yes, all those state assistance is there, but almost all majority of the acts of the cooperative societies, state control, excess of state control will be there on the functioning of cooperative societies, which restricts the proper functioning of the cooperative society. Say if they want to construct a school, they need to take the permission, they need to involve all the documentations, permissions, or the state regulations has to be followed. They want to construct a road in the society, in their society colony, under this society, again they need a lot of permissions, regulations like that. It controls state regulations, controls the functioning of societies. Internal conflict, as generally everywhere, as like as we has a service organization, local politics may affect the smooth functioning of cooperative societies. These are some of the demerits of cooperative societies. So let's move on. Yes. Types of cooperative societies. You have three types of cooperative societies. So, cooperative credit societies, cooperative marketing societies. Uh, so, if you see the major one, cooperative credit societies. Under the cooperative credit societies, where are this other one? Cooperative credit societies. Generally, these are the societies which are formed to provide financial assistance to their members. They accept, but how do they provide this financial assistance? By accepting the deposits from their members and grant the loans at a very reasonable interest rates to their members for a short-term purposes. So, under these credit cooperative societies, we have four types: rural banks, urban banks, employee credit societies, and wage earners societies. Rural banks means provide loans at lower rates to the farmers in the rural areas for meeting their needs, like a purchase of seeds, fertilizers, and other agricultural equipment. Urban banks, these formed in the district or towns for providing facilities to the small traders and artisans. In the urban areas, generally small traders, whoever are there, or artisans. Artisans means people who are into the handicraft work. Providing financial assistance to those people, they will provide loans. Employee credit society. These name only telling means these societies provide financial assistance to the employees. Generally, these societies are formed by the bank employees or government employees in order to provide financial assistance to their employees working in the government institutions or banks or semi-government institutions. Next, wage earner societies by workers in and around the town areas. Next, we have cooperative marketing societies. This yes, again, only for the producers who are into the marketing, small producers for marketing their products. Whatever, say for advertisement, I'm a producer, I have a shortage of funds to promote my product or to give advertisement. So this society will provide me some loan facility. So with the help of which I can do my advertisement of products. Cooperative farming societies. Here, here, rural banks provide financial assistance to buy the seeds, fertilizers, agriculture implements. These cooperative farming societies provide financial assistance for a large scale cultivation. Okay, consumer cooperative societies. They are formed by low and middle income group of peoples to ensure the supply of consumable goods to their members at a very fair prices. Producer cooperative societies to support and provide financial assistance to the producers for handicrafts or small scale business entities. Housing societies, they provide housing loans to their members at a cheaper loans. So these are the various types of cooperative societies. I hope you followed. So cooperative society, ownership and management are different. We have different types of business entities where sole trader, partnership, joint Hindu family cooperative societies, and sole proprietors, individual forms, partners, more than two business. He joined in the family is a family business, and cooperative societies are those which are the objective of serving society joined together, right? Object of serving their society and the members all, as a whole. Now we left with one more a form of business entity, that is joint stock companies. I'll share one more. Just 2 minutes. Joint stock company. What is a joint stock company? A joint stock company is a legal person which is separate from its owners, managers, and employees. Generally, joint stock companies work under the regulations of Companies Act, and they are supposed to work like they are the large scale operations. They involve large scale operations. So we are going to discuss about what is joint stock company, what are its features and all. Yes. Sorry, I'm sorry. It's a wrong slide. I'll just take one more. One more is there. Okay. Yes. So joint stock company is the one which is. Okay. Let us see. Joint stock company means a company is that an incorporated association, which is an artificial person having separate legal entity with a perpetual succession, a common sale, and a common capital comprised of transferable shares and limited liability. Means what? A joint stock company means where a group of, in simple to say, a joint stock company is the one where group of people join together in order to do the business with an object of rendering service or earning profits, and they work under the limitations of Companies Act. Okay, so if you see Companies Act 1956 says joint stock company means an incorporated association which is an artificial person having separate legal entity with a perpetual succession, a common sale, and a common capital comprised of transferable shares and limited liability. Means an artificial person who got incorporated, means who got recognized or registered, and with the registration which gets a separate legal existence, and having perpetual succession means long continuous existence with a common seal and a capital which can be transferred, and members who has a limited liability. Any of such organization is said to be a joint stock company. This is the definition given by Companies Act 1956. Whereas if you look into the new Companies Act 2013, a company is a business entity registered under the Companies Act. It is a legal entity with a separate identity from those who are its members or operate it. Therefore, it can be considered as an artificial person created by the law. So, what the new act says, any business entity which got registered under the Companies Act and has the with the registration which gets the legal existence separate from its owners, and operates on its own, and that entity is called as a joint stock company. It gets its own identity, it separate from its members, and it operates its business activities on its own name, instead of on the name of the members. Okay, that's how this kind of form of organization we call as a joint stock company, which is an artificial person. Why artificial person? Because of its legal identity. It got its identity legally on the name of the company, on the name of the business entity, rather than on the name of the owners. Say Reliance, Tata, Wipro, BHL. If you see these names, we are calling these companies with the name of the company name we are calling and you are identifying, but not with the name of the owners, right? If you say who is the owner of the Reliance company means you will say Ambani. But if you say where you purchase means from the Reliance, I'll say from Ambani shop you don't say, right? So a company which business entity which gets its identity, legal identity with the registration separating from its members, and it can which can do its business operations on its own. Such business entity is treated as an artificial person, and that is called as a joint stock company. This is the definition given by the new law. Okay, now let me share you. Now let us see the features of joint stock company. Features of joint stock company. If you look into the features or characteristics of joint stock company, first one is it is an artificial person. How we say a joint stock company is an artificial person? Because with the registration it got its own recognition, it got its own identity from the by the law. Law identified that particular business entity with the name of that entity rather than with the name of the owner. So that is how, and it can operate its business activities on its name. That's how it is said to be an artificial person regulated by the law. The next one is distinct identity separate from its owners. I combine these 2 points, I think. Why it is said to be an artificial person? Because on the name of the business or the business entity, it can do its business operations. It can acquire any assets required in the business. It can sell any assets owned by it. Okay, so it is separate from its members. If someone is selling, say, uh, Facebook. Yeah, please stop talking, chatting for no, other things. Concentrate on the topic. Facebook, if you see, Facebook shares value has came down, or Amazon value has came down, or Tata value increased. How you are saying? There's the name of the company instead of the name of the owner. So because it got its identity separate from its members. Okay, so on its name it can acquire or any assets or it can sell any assets or properties, and it enter into contracts on its own name. But so it enjoys perpetual succession. Perpetual succession in the sense continuity of existence. Continuity of existence. That means if one member may join or 10 members may leave the company, but it has its continuous existence. Why it has its how it got its continuous existence? Because the limitation over the number of members is not done. Public companies, unlimited members can join. Okay, so for the public companies, in case of private companies, only 200 is the maximum. Unlimited members. So it continues even irrespective of the members' death, retirement, or insolvency. It does not stop. It continues for a long period of time. The next one is common seal. Not only this perpetual succession because of large number of members. The other reason is that winding up of a company means closing of a company also involves so many legal restrictions, a huge process. So it will not that easily gets effect with the members. and that easily come to an end. Okay. The next one is common sale. What did we said in the first 2 points? Company being registered with the Companies Act gets its own legal identity because and it can do its business transactions on its own name, because of which we call company as an artificial person. So being an artificial person, to purchase or to sell its properties or to enter into any contracts, it need to sign authentication, right? See, if you are purchasing a property for yourself, what you do? Unless otherwise you sign on the document, you will not get the owner. If you are selling your vehicle, unless otherwise you sign on the document, you will not, that person cannot able to own the vehicle. Right? So we put our signatures for the authentication of any transaction. But how company put the signature? Because it is an artificial person. But being an artificial person, it got its identity separate from its members. So to be authenticate any transaction, any contract that it entered into the business in the business has to be authenticated. How? That authentication will come with the signature, but it cannot sign with the artificial person. So on behalf of the signature of the company uses a common seal, which is which represents the signature of a company. Common seal is a signature of a company on behalf to make the authentication, to give authentication to the transactions entered by the company. It enters into a authentication entered by the company. It uses this common seal as its signature. The next one is audit is necessary. Yes, as per Indian Companies Act, all the documents, the financial statements of companies are supposed to be get audited. That means they are supposed to be published. They're supposed to disclose the facts to the public. What are their resources, where they are spending, how they are spending, and what profit they made. Every detail they are supposed to disclose. Why? Because they are raising their capital from the public. They are raising their capital from the public. So they are supposed to disclose their facts to the public. Now, coming to the number of members, generally, joint stock companies, we have two types, basically, basic classification, private companies and public companies. In case of private companies, minimum 2 and the maximum 200. In case of public company, minimum 7, maximum unlimited number of members. Okay. The next, more transparency as they disclose their facts. So they need to maintain many transparency. Coming to the liability of joint stock companies, I think here those are not given. I'll discuss. Liability of joint stock companies. Joint stock company members' liability is limited by shares or limited by guarantee. Limited by shares in the sense members, whatever the number of shares held by them, to the extent of that shares, the liability of members gets limited. Means if a company gets into losses, has to clear their debts on the name of the company. So how it clears? After payment of all selling assets and payment, still some liabilities are left. Then whoever the members are there, whatever the number of shares held by them, to the value of that shares, they'll become liable. Or limited by guarantee. If they given any guarantee, to the extent of the guarantee only. So altogether, the liability of members of joint stock company is limited. Okay. The other feature, capital. How do joint stock companies raise their capital? Yes. This is the other important feature of joint stock companies. Joint stock companies raise their capital in the form of shares. That means first they raise their capital from the public, and from the public collecting the capital in a huge amounts is difficult. So they divide the capital into small units. Say for example, if a company has to raise 1 lakh amount of amount as a capital, this 1 lakh raising from the public separately in a different denominations and no uniformity makes it difficult, right? And it may not attract many public. So what it do, a joint stock company which wants to raise its capital which raises its capital from the public, first divides its capital into small units. Say 1 lakh capital is required. So what it does, it divides by 10. 1 lakh by 10 means 10,000. So 10,000 shares. So each unit is called a shares. So 10,000 units means 10,000 shares. He divided his capital as a 10,000 shares. Now each of the share will be given value, which is called share value. So each share value is 10 rupees. So 10,000 shares will issue to the public. So whoever the public interested in buying the company shares will buy, and whatever they can able to afford, that many shares they will buy. They can buy. That's how joint stock companies will able to raise their capital easily from the public. So coming back to the capital of the joint stock companies raise their capital from the public in the form of shares. Okay. Now, the next feature of joint stock companies is management. Yes, means they are raising capital from the public in the form of shares, and the public who invest in the company will become buy the company shares will become the shareholders. Okay, that's good. But who the shareholder means owner? So many owners. Then how to manage the business? So here, the management of joint stock companies is vested in the hands of the board of directors. Who are the board of directors? Board of directors are the elected members of joint stock companies, shareholders. Whoever the shareholders are there, among those shareholders, they elect a few members as their board of directors, and these board of directors will take care of the management of the business. Okay. So generally, and how the voting rights in joint stock company for electing these board of directors depending on the number of shares. Number one share, one vote. One share, one vote. So based on this, the shareholders will elect their managing personnel who are called as board of directors. Okay. So I'll repeat once again: management of the company. The management of joint stock companies is in the hands of board of directors who are elected by the shareholders. These shareholders' voting rights depends on how one man, one share, one vote. Okay. So that's about features of joint stock companies. The next one is, let us see the advantages of joint stock companies. Advantages of joint stock companies. First one is huge capital. Yes, joint stock companies, as a number of members are large in size, they're able to collect huge amount of capital. There is a possibility of collecting huge capital from the public. The next one is better decision making. Yes, joint stock companies make their members. Excuse me. Board of directors, elected members. So among the members, whoever the people having a managerial skills, the better managerial skills that can be elected. So in the hands of the management who are separate from the members and who are elected members with the efficient managerial skills and professional skills. So that's how they can able to have a good management. Good management means better decision making. The next one is limited liability and low risk. Yes, in joint stock company features, we have seen liability of joint stock company members is limited, either limited by share or limited by guarantee. So automatically risk is less because say I want to invest in a company, but company means in a large operations, large funds it deals. If I become a company member as a shareholder, suppose my company gets into losses, and if I need to pay more for the debts, will I come to invest in that company? No, na. So what companies did? Say to attract the more public to invest in the company shares, made the members liability limited. So limited means, okay, if I invest in this company 100 rupees, I may get 100 plus 100, 200 profit, or I may lose hardly 100. If I'm able to have this confidence, surely I'll show interest to come forward to invest in the company shares, right? So that's the advantage. Limited liability, because my liability is limited and my risk, if a company goes in loss, hardly I lose 100 rupees. Because I invested 100, I'm going to lose 100 rupees. So I show interest. So that's how it attracts more people into company to invest in the company's shares. That's the advantage. The next one is limitations. Sorry. Drawbacks. Where are the drawbacks? Oh, no drawbacks. Yeah, even I think I forgot to add the slide drawbacks for joint stock companies. I'll just give orally. The limitations of joint stock company. Yes, do joint stock company face certain limitations? That's one is a huge restrictions, legal restrictions. Yes, registration. We didn't talk about the registration, right? Registration of a joint stock company is a important. Registered joint stock companies are must to get registered. Okay, joint stock companies must to get registered, because it's they are collecting capital from the public and working in a large scale operations. So in the public interest, joint stock companies act made it compulsory for a joint stock company to be get registered, and this registration involves huge legal formalities. That's the reason why the formation of a joint stock company involves huge legal formalities and takes a lot of time. That's the one of the drawback. The next drawback is that board management. Board of directors are elected based on the shares held by them. So there is a possibility and lack of motivation, because the other members may not show that interest in electing their members. Okay, they may not think about the benefit of the members, other members. So this kind of lack of motivation will be there. The next one is, what do you call it? See, lack of secrecy. Lack of secrecy because joint stock companies, being a large scale organization operating with the public funds, need to disclose their financial statements to the public. What are their resources, where from they are generating their resources, how they are spending their resources, and what is their amount of profit, properties. All these details are supposed to be disclosed through their financial statements to the public. So when they are disclosing these facts to the public, there is no secrecy cannot be maintained. So okay, when there is no secrecy, it's difficult to be successful, take a decision of the delay in decision making. The other drawback is delay in decision making, because joint stock companies, being a large scale organization operating by the board of directors, managed by the board of directors, any decision in the organization has to be taken by the board of directors by conducting the meeting and decisions with the acceptance of the board of directors, which involves a protocol involves. So this takes a lot of time to take the decisions. That delays the decision making. When decision making is delayed, what is disadvantage, madam? Why? Yes, of course, they have to follow. Then only they yes. If you delay the decision, you lose the opportunities, profitable opportunities. Whatever comes into the business, will lose. See, if I'm the individual, I find yes, there is a customer who want this product. I immediately I'll make and I'll deliver. But if I'm capable, I'll make and I'll try to sell it. But in the joint stock company, it's not like that. Yes, customer is or needs these kind of product. Then company we need to develop means first board of directors should join, take the decision to make or not to make, and finally they will come. By the time they enter into decision, some other might have taken the decision and we produce the products. So delay in decision making due to board of like managerial requirements, so which delays. What is the drawback? They lose profitable opportunities. The next one is that decision making, lack of secrecy, lack of public confidence. This is a very little one, but lack of public confidence. Why? Because of they have the perpetual, this instead of drawback we can take under the advantage, perpetual succession. They'll score the more public confidence, more public, as the company has a long existence, more public will have a confidence and will trust and come forward to invest in the company. So these are some of advantages and disadvantages of the company. Okay, let me recall, just a minute, and let me recall request. Okay. Okay. So that's about John Stock Company. And all together, we discuss about the forms of business entities. I hope you all followed these different forms of business entities. So in our next class, we discuss about I think under the forms of business entities, joint stock company, we have uh, this is business organization. Let me look into this. After forms of business entities, yes, under the block 3, we are in block 3. Joint stock company comes under the block 3, which is also one of the forms of business organizations. We discussed about joint stock company, its features, merits and demerits. In our next class, that is tomorrow's class, we are going to discuss about incorporation of a joint stock company and the documents to be submitted for the registration of a company. Okay, with that we complete our third unit, third block. In tomorrow's class, we are going to discuss about incorporation of a company, and I would like to yes. You all can unmute yourself if you want. Yes, why not? Tomorrow class is there. Tomorrow, today Sunday, na? Next
Thank you,
class.
madam.
Saturday and Sunday, I'm sorry.
Questions,
Next
madam.
Saturday and Sunday.
Hello.
I want
Hello,
important
ma'am.
questions.
Hello, ma'am.
Hello. Hello, ma'am. Model paper. Important questions.
Whatever we are discussing, those are in
Hello,
class. We get very
ma'am.
limited time, so we discuss only important questions.
Ma'am, ma'am.
Yes.
Ma'am. Excuse me, ma'am.
Send the WhatsApp group, na, ma'am.
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 Excuse me, ma'am.
Sorry?
Exam
Ma'am.
date, ma'am. Exam date.
Yeah, I'm
Exam
there.
date.
I'm here. I'm here. Please.
Yes, ma'am. Ma'am, I have a doubt, ma'am. Ma'am.
Yes, please.
Ma'am, is
Ma'am,
there
I
any
have a
WhatsApp
doubt.
group, ma'am? Ma'am, is there any WhatsApp group? Because this is my first class, so I'm doing my
I don't know
previous
any
test,
WhatsApp
ma'am.
group. Okay. It's only students form that group.
So, ma'am, it's not official group from the BR Medical College.
This is the link. You can take forms of business organization. And next class, that is, I think, today Sunday, na? I forgot Saturday, I'm thinking. Okay, next Saturday, Sunday, we discuss about joint stock companies formation of a joint stock company. Okay, right. Thank you, children. Thank you for being here.
Thanks, ma'am.
Ma'am,
Important
ma'am,
questions, ma'am.
Questions, ma'am.
I'm taking in the class. Those all are important. No separate important questions.
मैम आप
Yeah.
मॉडल पेपर्स कौन से लेना मैम? आप लोग लेके ना फर्स्ट क्लास में.
that if I'm having, I'll try to send. I'll look at my files. If I find any model papers, means previous papers, not model papers, any previous papers, if I find, I'll try to share you.
I got the model papers, madam.
Okay, nice now. Then you can prepare from that. I already shared. Today's PPT. Please do look into
Okay,
that.
thank you, ma'am.
Thank you, ma'am. Thank you.
Aisha is here. Aisha is here. Muskan.